Hey, what's up everybody? My name is Rainer and welcome back. So in this video post, I'd like to share with you what 95% of traders fail to do. That's a huge percentage. 95% of traders. What is it that they fail to do? So look at this chart. This is the chart of dollar yen. And you can see that price at this point in time is trading around 106. And this is the mindset of most traders. I can assure you that, right? They will tell you that, oh Rainer, price is so high right now. Price is overvalued. I won't go long right here because, price is too high. It has to come back. Price is overbought. It's too expensive to be going long right now. And I can tell you, this is the mindset of most traders out there. They will look at this chart and tell me, oh Rainer, expensive, overbought. They will not be looking too long. And guess what? If you fail too long, this is what you have missed out over the last few months. Look at this. Do you know how many pips that you had given back because you feel that price is too high? Because price is overbought? I will tell you, I think it's about close to 2,000 pips, right? You miss close to a 2,000 pip move because you feel that price is too high. So what is my message for you boys and girls today? It is this. Price is never too high, too long. This is the message, right? Every time you look at the chart, you think that price is very high. I want to tell you this, that it may look high at this point in time, according to what your chart says. But according to hindsight, right? If you look it backwards, according to hindsight, it may be very low. Just look at this example that I've shown you earlier. At this point in time, this looks very high. But in hindsight, it looks very low, doesn't it? So always bear in mind that, price is never too high, too long, or too low, too short. This is a mantra as a trend follower that I've been advocating for years and years now, And if you read trend following, if you want to be a trend follower, you have to, or you must, adopt this principle towards your trading. To go long, even though price may seem overbought, price may seem too high, the newspaper or the article, the media are telling you that, price is not backed by any fundamentals, but just look at what price is doing. If it's trading higher, if you see higher highs and higher lows, just look to long. And in this example, dollar yen, I'm sure if you have been with me over the last few weeks, you know that I've been looking at this pair for quite some time now. I said this. I said, look at the weekly chart. Oh, sorry about that. I said look at the weekly chart. And this is what I noticed. Historically on dollar yen, it tends to make this kind of move, right? It makes a strong impulse move higher, a very strong momentum move towards the upside. Then it likes to fall asleep. It likes to go into sleeping mode, which is highlighted over here, right? They had this triangle pattern, this consolidation, where it went to sleep for quite a few months. Then finally, it broke out higher once more, but not the kind of strong impulse move that we saw previously. And then what happened? It went to sleep once more, consolidating I think for about quite a number of months or even a year. Then finally, the strong explosive move occurred once more. We had this strong momentum, this breakout towards the upside, followed by a shallow pullback. Then we had another strong momentum breakout towards the upside. Then what happened next? Again, looking at it historically, you notice that the dollar yen, this pair, it went to sleep once more. Right, basically it went to a consolidation mode whereby price is whipping up and down, right, with no clear sense of direction. But looking at this chart, it should give you a clue, a tip to favor long towards the upside. Why is that so? Why? Because looking at the trend on this weekly chart is telling you that price is forming higher highs and higher lows. So the path of least resistance is still towards the upside until we are proven wrong. But looking at the chart, looking at, say, up to this point in time, up to here, has the trend end? Is the chart telling you that the trend has ended? No, because we still have higher highs and higher lows, right? We still have higher highs, higher highs, higher highs, and higher highs. Sorry, I mean higher lows and higher highs over here. So what makes you think that the trend will end? Don't predict, whether price is so high, so overbought, that it cannot go any higher. Your job as a trader is to trade what you see, not what you think. Okay, this is key, right? Trade what you see and not what you think. And again, another reason why I was bullish on it, look at the daily chart. I mentioned last week or last couple of weeks back, say this is a key resistance that I'll be looking out for. And this is higher lows here, here, over here, and over here, coming into this key resistance over here. You have higher lows coming into a key resistance, and you have a longer term trend that you saw on the weekly chart is on the upside, uptrend. What is price telling you? It's clearly telling you that in the long term, the bulls are in control. And right now, looking at this daily chart, you see that the bulls are trying to push price higher and higher. The bears clearly have control at this area over here, which is this key resistance. No doubt, I can see that. It's on the chart. But every time the bear tries to push price down lower, it couldn't really get very far. The first time he pushed down by this much. Second time he pushed down, he pushed price only by this much. The third time he tried to push, he only managed to push this much. So what does it tell you? The bears have a ground and territory that they are clearly in control. But every time they try to push price lower, they couldn't get very far. And it's because that the bulls are actually stepping up their game. How do you see where the bulls are stepping up their game? It's based on this higher lows, higher lows, higher lows, higher lows coming into this key resistance level. So you have number one, higher lows, HL, higher lows coming to the key resistance level. Number two, you have the longer term uptrend. Longer term uptrend. So the odds are favoring towards your side. That, there's a good chance that price may break out. And this was where I got long. I simply got long based on a buy stop order above this swing high over here. I had a stop loss of about 2 ATR, which is about here. And I let the market decide where it wants to go. Whether it's going to trade higher or whether you do a false breakout or stop me out. I leave it entirely to the markets. That I have no control over. And this is what, I want to share with you, boys and girls, this week. So, this is the chart of dollar yen. So, moving on, let's check another chart out. This is the chart of Nikkei. Nikkei is the Japanese stock index, Nikkei 225. And look at this chart again. Is it very similar to you? Well, it's still an uptrend, that's one thing for sure. But if you are looking at this point in time, at this chart, where price is currently at about 18,000 over here, and you're thinking, oh, Rainer, price is overbought, it's so expensive, I won't be going long this index right now, it is suicide, I'm paying premium in the market, I want to buy low and sell high, not buy high. But then again, if you have this mindset, what would happen? Well, you would miss this much of upside, another 2,000 points, where price traded higher, this is another 2,000 points. Because you had that mindset that is holding you back, that you don't want to pay premium, you want to buy low and sell high, then this is what you'll miss. You'll miss another 2,000 points in the Nikkei market. So remember I said earlier, price is never too high to long or too low to short. And this is another example in the Nikkei market. And 95% of traders would face this problem. They had the hesitation to pull the trigger to go long. Why? Because they feel they want to buy low and sell high. Price is too high, it's too expensive. Or when you're young as a kid, you are culturally wired to buy low and sell high. When you go to the supermarket, you see apples are trading at, it's selling at 3 for $1. And one fine day you come into the supermarket, you notice they're selling 3 for $2. What will you do? Would you buy the apples? I'm sure you wouldn't. Because why? The apples are too expensive. So you have that mindset since young. But beware when you bring it over to trading. Beware, because it may cause you to miss tremendous amount of opportunities in the market. So do beware. So this is another example, it's the Nikkei market. So this is the take I have for you, boys and girls, this week, which is this. Number one, price is never too high, too long. And number two is just the opposite, just vice versa. It's just basically price is never too low, too short. And this is key. As a trend follower, this is key. This is one of the principles that I've always adhered to. And just to share with you, boys and girls, today. Hope you guys find it useful. With that, I wish you guys good luck and good trading. I'll talk to you soon.